Welcome our dear viewers. First and foremost, we would thank you for subscribing on our YouTube channel, Moto Online. My name is Lawrence Chigozi. We thank you and we beg you to subscribe more and more. Don't forget our YouTube channel. It is called Moto Online. So, as per our last video, we had came up with a general journal, and we had entered into deep what a general journal is. We have done an example, but one of our viewers requested to make a brief highlight on what a general journal is. So we are going to answer him. So a general journal, remember, a general journal, it is that financial statement that records transactions on the debit and the credit side, basically with a specific reason behind on why we are creating these accounts. So a general journal, in simple details, it is that statement that records transactions in their chronological order as they are given. We are going to look to the key features of a general journal. First and foremost, this general journal, based on the primary purpose of it. So suppose we are given an example that so and so. So we have a business, it can be in names of anyone. So we can take an example of XYZ Limited coming up or commencing up with a business that wants to operate. So let's say a general journal. We are starting with key features. First and foremost, the general journal, all transactions are recorded in the chronological order as given in the question. And these questions, we are going to see them, they have a start date and the end date. So in simple details, a chronological order, this general journal helps us to arrange these transactions in a step-by-step order. So these transactions are recorded first on the start date, and they end up to when this transaction, and for example, they range from first of any month and towards the end. And remember, this general journal, it is that statement that records transaction, and how this general journal is going to help us to furthermore draft these transactions in their rightful order. First, secondly, this general journal helps us to follow the process called the double entry system. What is a double entry system? A double entry system, it is that system that transactions obey, that all transactions, all business transactions obey. First and foremost, these transactions, for example, let me give an example. Let's say Kato purchased goods. Kato purchased goods worth 2M. So in such a question, I'm just giving a brief summary on what a general journal is and in relation to a double entry system. So a general journal, let's say this transaction that Kato purchased goods worth shillings 2 million. First and foremost, we must record, we must first think of the transactions that are going to be created. What are those transactions that say Kato purchased goods worth 2 million? In a general journal, how do we record such a transaction? So we could first understand the process of the double entry system. It means that we are going to create two corresponding accounts, one to be debited and one to be credited. But remember, as per the general journal, we are starting with that transaction that is debited only. And so under this question, say if Kato purchased goods worth 2 million, remember in the general journal we eliminate real accounts. Real accounts, these are names of individuals that are making transactions. So here we look at, so here we have purchases account and the cash account because Kato purchased these goods in cash form. So here we are going to look at purchases account and cash account, but you must determine and say that which one transaction is going to be debited, or in further details, which account it's going to be debited. Remember, the account that's going to be debited, it's that gaining account. So if we had a purchase of 2 million made by Kato, it means that we are going to have the purchases account going to be debited with the 2 million, and the cash account being credited with the 2 million. Why am I creating these two accounts? I'm just giving a brief summary. The purchases account, it's going to gain through the cash account. Since this purchase, it is made in form of cash. So, and this amount of cash totaled to 2 million. So, purchases account is going to be debited by 2 million, and cash account is going to be debited by, it's going to be credited by 2 million. So, in this circumstance, cash is losing to purchases, and the purchases is gaining from cash. So in further details, we could say purchases account is going to be debited by 2 million, and cash account is going to be credited with the 2 million. Remember, with the general journal, we are creating a reason, a specific reason as to why we are creating these accounts. So in our brief reason, say that to record a cash purchase, or we could say being cash purchase, anyone could give a reason basing on his or her understanding. So in such a circumstance, if Kato purchased goods worth 2 million, here we are going to look at the purchases account, which is going to be debited by 2 million, and the cash account which is going to be credited by 2 million. Remember, cash is losing to purchases. And furthermore, in our videos, we are going to go deep into, we are going to look into ledgers, and we are going to see how these accounts are going to be further, or maybe further be shifted from the ledgers to, remember, the last book of financial statements called a trial balance. That this trial balance, it is that financial statement or the book of original entry. Anyone can call it a book of an original entry or a financial statement that stipulates the chronological order of these accounts. So, in such a circumstance, Kato purchases account, if Kato purchased goods worth 2 million, so purchases account it's going to be debited by 2 million, and cash is going to be credited by 2 million. So that is what we mean, or what we mean by what a double interest system is. So also the third feature, the general journal helps us to in error correction. So let's take an instance that could say that, still on the previous example, if Kato had purchased goods worth 2 million, but in this circumstance, Kato is purchasing goods on credit. On credit. What do I mean by error correction? In this general journal, if Kato had purchased goods on credit, these goods that they were worth 2 million shillings, so on credit, remember, we would also change a transaction, or we could also change the chronological order. If Kato purchased these goods on credit, given to the fact that Kato is purchasing from a business. Remember, I told you that this business, it could be names of anyone. So we are taking an instance of this business belonging to XYZ Limited. Anyone can call it. Any can start with any name of the business based on the question. If Kato had purchased these goods on credit, how could we correct such an error? So Kato purchasing these goods on credit. How am I going to create these two accounts? It means that Kato is purchasing, so we have a purchases account. Remember, Kato purchased these goods on credit. It means that Kato did not pay cash. We are going to look into another transaction when we are going to see that Kato paying at a later date. At a later date. So, in simple details, purchases accounts is going to be debited by 2 million. Remember, Kato is purchasing goods on credit from XYZ Limited. So, purchases account it's gaining, and XYZ Limited, what's the name of the business? Or remember that person giving goods on credit, he or she is called a creditor. These terminologies where we are going to use them in our further examples, as you are going to see in the videos to come. Creditor. So who was someone may say purchases account and the creditors account. Creditors account, it is that name of the business of XYZ Limited. So anyone can say XYZ Limited or creditors account. But we are going to see on a later date, let me say on the 5th, Kato paying these goods that he purchased on credit. It means that if we had an instance, let me say on the 5th of, let me say January, Kato paid 2 million. It means that in the previous transaction that was made on the 2nd when he was purchasing these goods on credit. So on 5th, Kato paid 2 million. How am I going to balance that? Or how am I going to create such accounts? So in this, we are going to see which 2 corresponding accounts can we create. Kato paying. It means that Kato is paying. It means that he's paying for the purchases that he made. It means that here we are going to have the purchases account or Kato's account, but in this case, we are having Kato, the one paying, and the business is going to gain, and this business called XYZ Limited. So here, in this instance, I have XYZ Limited account or the creditor's account, going to be debited by 2 million, and cash going to be credited by 2 million. Remember, in this instance, cash is losing to the creditor, which was XYZ Limited. So that is it. And basically here, we are going to look at the third feature. We could say the last one, that the general journal, it helps us in the initial positioning of these financial statements. Remember all these transactions that are made in the general journal, that they are shifted to the trial balance. So furthermore, as we're going to see in these videos, we're going to see these journals. For example, we have ledgers, we have the trial balance, and we have the general ledger. Don't confuse it with the general journal, but we have a general ledger. Yes, that general ledger, it summarizes all of those transactions that were made from the ledgers. And furthermore, from the general journal, we come into what we call the trial balance. So don't forget also to subscribe on our Moto Online for further understanding. Get more content on our online YouTube channel in names of Moto Online, please, our dear viewers. Furthermore, some of you ask yourself, and many of you find challenges or find a hard time on how the introductory part of these journals are, or the general journal. So, in such a circumstance, even mind you, some of you don't know how to draw what a general journal is. Remember, a general journal, it starts with a title. Remember in our previous example, that business belonged to XYZ Limited. General journal for the month of January 2019. So that is a mark. But mind about how this title you are writing it in the middle of the page. XYZ Limited, that is the first line. Go to the second line, General Journal. Go to the third line for the month of January 2019. This is one single mark. Minus even drawing the table first. Then afterwards here, you are going to do, or you are going to draw our table. We are drawing our table. So this is how, our dear viewers, please don't forget to subscribe to our online YouTube channel in names of Motor Online, and our journal. In the previous video, we said that it starts with the date, then followed by the account titles and explanation. Please don't forget, while you are following, please like, comment, and subscribe more. Account titles and explanation, the debit side and the credit side. You are going to find some of you in the previous textbooks where you are having this column of folio. At times you can choose to eliminate it or to draw it, but nothing is going to be posted, or nothing like any, unless when otherwise this general journal, it is asking you to also to draft the ledgers. This is how you are going to do it. Let me say, because in our previous video, we didn't draw that. So we are going to look at the use of that folio in this video. So please don't forget also to subscribe to our Motor Online for further information. Get more content on our YouTube channel. So remember, on the 1st of January, this business, XYZ Limited, commenced up this business with the cash at hand and the cash at bank. Cash at hand, it was 3 million, and the cash at bank was 2 million. How do we record such a transaction? Many of you, you viewers that are seeing me right now, how do we do such? How do we draft that transaction in a general journal? So here we are starting. Please don't forget that all these transactions are made in the month of January 1st. If XYZ Limited commenced up business with the cash at hand and cash at bank, remember that in such a circumstance, cash at hand and cash at bank, that these are assets. What are those assets? These are assets. In a brief talk, what is an asset? An asset. It is, remember, these are items that increase on the capital of our business. So in this circumstance, we had the cash at hand and the cash at bank. Remember, these are accounts, and we are debiting since they are assets. So cash at hand was 3 million. 3 million. And the cash at bank, it was 2 million. Sorry. In this, so we are rating cash at hand 3 million and cash at bank 2 million. What is that corresponding account? Remember, that cash at hand and cash at bank, that they are in form of capital. XYZ Limited had capital in cash at hand, it means that XYZ Limited lost capital to cash at hand and cash at bank. So we have the corresponding account, that is the capital account, and we are going to add these totals. When you add the 3 million plus the 2 million, we have 5 million. You see these accounts balancing. When you add the 3 million and the 2 million, it adds up 5 million. It means that since these are assets, so we are going to credit the capital. Since capital is the one losing in the form of cash in at hand and cash at bank. Remember the distinguishing feature of a general journal that it has a specific reason as why you have created these two accounts. It means that you're going to say to record startup capital for the business. You see the account balance and it has the reason. So here we had, remember, each transaction you make, it is a mark. It means that you have 2 marks in one transaction. Why? Because you have balanced this transaction. A general journal, remember, you cannot go to the next transaction well you have not balanced that transaction. You see it balancing and also creating a specific reason as to why you are creating these accounts. To record startup capital for the business. Someone may say, in his own understanding, being startup capital for the business. So, in such a circumstance, this is going to be a balanced transaction. Remember, we had the cash at hand and the cash at bank. And we are debiting this since they are assets, and we are crediting capital with the total amount of cash at hand, cash at bank. That is how, our dear viewers, but have you subscribed to our online YouTube channel? In names of Muto Online, please subscribe, like, and share. And also, in a brief summary, this startup transaction gives a lot of headache to very many of you out there. How do you record such a transaction? You see the transaction. This is how we record. Remember, I told you I'm going to give you the use of this folio, the folio column. If this question asks furthermore to make ledgers, but since it is asking for only and only the general journal, we are not writing anything that corner. But if it further asks for ledgers, it means that in this cash at hand, suppose we are creating ledgers, this cash at hand, our dear viewers, is going to be our ledger number 1. Since we are going to pass it into ledgers and then cash at a bank to be our ledger number 2, and our capital account to be our ledger number 3. You see, that is the use of a folio. But in this case, they have not asked us to make ledgers. So there is no reason as to why we are denoting this with the ledger numbers. You can leave this. You can decide to draw it and leave the column, or decide to leave it. From debt, account details, and explanation straight to the debit side and credit side. Remember, this says look into the real name of the of these amounts. Some may give you in dollars, Ugandan shillings. So, but our transactions were recorded in Ugandan shillings. Please don't forget also this. Ugandan shillings. In a conclusion, this is how we do this transaction, how we post this transaction in the general journal.